this is just the beginning. We are now going to see an acceleration of silver through 50, 60, 70, 80, etc. And I think, if you compare on an adjusted level, if silver goes up as much as gold has since 1980, then silver should today be about $250. And I think that's just a start. We are going to see the most massive explosion in the silver price. I mean, I call this $50 line resistance line, and it isn't resistance anymore because we've gone through it properly. But the market is still holding it at around $55, $57. I think we're going to see it all of a sudden just explode.
The demand for industrial silver, the 1,000-ounce bars, is at a level that I have never seen before. And it's causing, in my view, or one of the main causes, to see a significant rise in the silver price.
The surge unfolding in silver marks the transition into a new monetary phase, one defined by structural scarcity, relentless industrial demand, and a global system losing confidence in paper-based value. Physical tightness is no longer a rumor. It is visible in delays, delivery stress, and unprecedented buying from energy, tech, and investment channels. With the metal holding firmly above long-term ceilings, this move represents the early acceleration of a cycle driven not by speculation, but by necessity. Egon von Greyerz, a longtime wealth preservation strategist, and David Morgan, a veteran silver market analyst, emphasize that today's breakout is still modest compared to what real fundamentals imply. Silver near $60 today could accelerate toward $100, $250, or even far higher as shortages deepen and global capital rotates into hard assets. When adjusted for real inflation, the 1980 peak in silver equates to nearly $1,700, a reminder of how profoundly undervalued the metal remains. With industrial use now consuming half of all annual supply and decade-long deficits continuing to widen, the pressure underneath this market is historic. Now, we present the clips from their interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
We were getting to the end of a monetary era, and a monetary era always ends in a debt explosion, and then a collapse of the currency, a collapse of the financial system, social unrest, etc. So that was what I was talking about already 35 years ago. I came to the conclusion, of course, that gold and silver, to some extent, were the best forms of assets to hold for wealth preservation purposes. They're nature's money and the only money that has survived in history. So, and of course, you talked about silver. We always, of course, the king of the metals is gold, but right now silver is particularly interesting, and also it's interesting to know that whenever the metals make a big move, and that's what's happening now, the gold-silver ratio starts coming down, and the gold-silver ratio is very high now. It's been over 120, it's been 80 for a while, and now it's down in the 70s. And we will see that going to maybe 30 or even 15, the long-term average of the gold-silver ratio. So gold-silver ratio means simply gold price divided by the silver price. So now the move, you remember, I've been around for a long time. So 1980 was the first peak we saw in gold at $850, and then silver was $50, and then silver came down to under $10. I think came down to $5 even, and gold corrected also, but not to the same extent. And then again back in 2011, gold was $1,920 and silver was $50 again. So gold had more than doubled and silver was the same top as 30 years earlier. And again, we had a big correction, always bigger in silver. And now we're again back to 50 for silver, but at over 4,200 for gold. So this is unique. And this is for the first time, silver is actually coming above the $50 level. And this is just the beginning. We are now going to see an acceleration of silver through 50, 60, 70, 80, etc. And I think, if you compare on an adjusted level, if silver goes up as much as gold has since 1980, then silver should today be about $250. And I think that's just a start. We are going to see the most massive explosion in the silver price. I mean, I call this $50 line resistance line, and it isn't resistance anymore because we've gone through it properly. But the market is still holding it at around $55, $57. I think we're going to see it all of a sudden just explode. And that's not sensational. That's just a reflection of the demand for silver. The silver industrial demand has gone from 10% of silver use to 50%. 50% of all silver is now used for industrial production. And then the investment demand, there is always a shortage every year. So we're seeing massive shortages in the physical market. And for commercial purposes, silver is, of course, used for anything from solar cells to car batteries to electric and electronic products. And that, as I said, there's major demand. And Johnny, nobody realizes because all of the trading in silver is basically paper. And no one has ever successfully used paper for a car battery, an electric car battery, or a solar panel. So we're not going to, there will not be enough silver at these prices. So there will be this, they will jump all of a sudden. And so I see silver as just a sign now, or not just of silver demand, but actually as a sign of the beginning of the accelerated fall of this monetary era, which obviously means also currencies are going to collapse. Inflation is going to rise, and markets will also come down dramatically. Stock market, there has been a shortage of about 200 million ounces every year for the last 5 years of silver. They make that up by manipulating the futures market and borrowing silver, etc. That's not going to be possible in the future. People will, as I have said for many years, ask for delivery. And when they ask for delivery, there will not be any silver there. No silver at this price. That's why we're going to see the most massive explosion, as I said. And that's just the beginning of, as I said, the accelerated fall of this monetary era. Of course, gold will follow, not as fast as silver, because there's not the same type of shortages in the gold market as there is in the silver market. But the metals will now start the final phase in this era of climbing to levels that will be multiples of current levels.
I see silver probably making over 60 this year. I mean, we've got 1 month left. Probably get another couple bucks on it here within the next 4 weeks. Longer term, I do still think we're in an acceleration phase. So if we top out in a year and a half to I don't. I mean, I'm on record in 2003 putting in writing. I saw $100 silver, and that was when silver was at $5, a little under that. So I was looking for a 20-folding from the year 2003 to wherever it ends. I don't know. Price predictions are so difficult because there's so much funny money out there that might be seeking a safe haven that's really hard to anticipate or count. But I do think when the mainstream media puts me back on CNBC, you might be consider selling some of your silver holdings. But I would say on gold, I think 5,000's a gimme. I think it'll make it to at least that level. Could it make it to 10? Yes. Could it make it to 20? Yes.
In what time frame?
Oh, I'm still looking at, near term. I'm looking at acceleration phase. I mean, you may have heard me. I don't know how much of my podcast you've heard. I'm sure you're very busy, but I've said over and over again that 90% of the move comes in the last 10%. So if that's true and this market started in 2000, we're in 2025, what's 10% of 25 years? 2.5. And if that's 90% of the move, and that's not an exact term, but it's the idea of the acceleration. Look at how long it took to go from $2,000. Look at how long it took to go from $30 silver to $60. Not long. If that trend continues, then I'm suggesting that it will. We could be getting to the top here very soon, especially with what I wrote in the editorial. We're at a point where the Fed is basically losing its power. It's becoming more and more powerless over the financial markets. And the markets themselves are valuing what the US dollar is worth today, tomorrow, what its collateral abilities are, and how much you have to have the banks of last resort the Fed buy back bonds, notes, and bills that no one else wants.
Silver's transformation from a niche precious metal to a strategic asset reflects both structural scarcity and the accelerating breakdown of the monetary system. Historic volatility kept many investors away, but the current cycle is driven not by speculation, but by rising industrial use, chronic supply deficits, and global demand for assets free of counterparty risk. As shortages deepen and investment flows strengthen, silver is positioning itself as both a defensive holding and a high-conviction growth asset in an era defined by currency debasement and weakening trust in financial institutions. Physical supply is tightening at a time when global investors are steadily increasing allocations, often buying weakness rather than chasing momentum. Industrial consumption continues to climb, recycling remains limited, and above-ground inventories cannot meet structural needs. This combination points to a market entering an acceleration phase where upside becomes increasingly asymmetric. Let's get back to the interview.
Silver in 1980 went to $50 and then down to $5.
Yeah.
Not many investors can live with that. And of course, people never sell at the top, they sell at the bottom. But this is why, as I said, we told investors not to hold silver, certainly until let's say 2013, 14, 15, or any major amounts of silver. We thought, I think our clients held from 2013, 14, maybe 15% roughly. And now, as you said, I think that comfortably, I see now silver not being just another precious metal, but it's also probably the most exciting investment combined with wealth preservation that is available today for people who want to both protect risk and see a major upside. So I would be happy to be overweight in silver now versus gold. Not in totality, but high percentage that we have recommended before. So certainly 30% or even 35 right now. I would recommend, because we're going to see the ride of a lifetime. And remember, it's not Bitcoin here. It's not speculative. It's not something that can go to zero. It's money. That's always been money for thousands of years, both gold and silver. And it's not, therefore, you're actually having wealth protection at the same time as an opportunity to really make some good returns. And, we see investors buying when it goes up, and then when it comes down and you get a really corrects, we've seen no major correction lately, but even smaller ones, this is when you should buy. Remember that I was watching gold for many years, because it went from, as I said before, 1980 went from 850 down to 250 in 99. And we waited for it to consolidate and then see that it came up above $300. And that's when we bought ourselves and recommended to our investors to put as much as 50% of their assets into gold at $300. That's what we did. That was a very good entry point for wealth preservation. But even today at $4,000, we have a long way to go. So, anyone who wasn't in from the beginning, you haven't missed the boat yet. Actually, that's I show in one of my illustrations a picture a friend of mine has done, which is, is not too late to jump on the gold wagon.
When 1%, 2%, it doesn't take a huge percentage of the population believes that their currency is going to fail and I've got to buy something of value to maintain my purchasing power. When that moves into the US dollar, and it has, but not to a big degree yet, when that takes place, you really can't undo that psychology. And that's when the run to gold really starts. And the old adage, there's no fever like gold, is very true. When people run on fear and they think that the only thing that they can do to protect themselves is to own something that doesn't have a counterparty risk, is known to be of value for thousands of years, and something they can believe in and actually assuage some of that fear, you will see a move into the precious metals we've probably never witnessed before, because We now have the internet, instant communication, and easy access over the web. On the demand side for monetary demand, that accelerates. The higher the price goes, the more people feel that the dollar's demise is nigh, and therefore they're actually more motivated at a higher price to buy silver. Now, that hasn't taken place yet in the retail market. I don't want to contradict my earlier statement, but I believe it is coming soon. It's been about 150 million ounces per year, but it hasn't increased. When I went to visit China on a silver situation, I met with fairly significant people at their mining bureau in Beijing. And one of the most important questions they kept drilling me was, how do we recycle all of our silver today? And I told them we don't. A great deal of it ends up in landfill. And they, being frugal, I would say, were taken back by that, because their idea was to basically recycle every bit of silver that they possibly. So they looked at it differently, let's say, than perhaps we do. And I think silver is such a maverick compared to, gold is truly an establishment metal, although you won't hear that from many people other than myself and perhaps some of my peers. But it is the money of last resort. Central banks have still continue to buy it. It's their money as kind of a backup position, as we could talking about on the CBDC. It's the money of last resort. It's been money for thousands of years. It will continue to be so. And the banks use it because they know that if all else fails, there's gold. Now, silver used to have that role, but it hasn't basically since the crime of 1873, when silver was demonetized in the United States, although at one time the world was basically on the silver standard. So I think that it doesn't have the punch that gold has, and it's also a very small market. But I did smile, you might have caught it, because of all of those names that are so well known, so well respected, the one that does stand up for silver is none other than Warren. And we have to recall that Warren Buffett bought 130 million ounces of silver off the COMEX in 19. And when he declared it on his form for the year for Berkshire Hathaway, the word silver never actually appeared in the report. It was under the miscellaneous caption, because by law, if anything you have in your portfolio is less than 2% of your holding, you could list it as a miscellaneous. And that's exactly what Berkshire Hathaway did when they bought. But let's look at the other side of the coin. 130 million ounces of silver purchased off the COMEX put quite a dent in the COMEX silver supply physically in that year. And they only delivered him about 90 million ounces, and the other 40 million ounces they basically got over time. It spiked the lease rate in silver, and it stayed high for quite. So even though it was a small amount for Berkshire Hathaway, less than 2%, from the perspective of the physical silver supply, it was quite a punch, as I said earlier, into COMEX. So silver is a very small market. Probably known as one of the best investors of all time. Certainly hates gold but loves silver. Very seldom does anyone ever put the microphone in front of him and say, you badmouth gold very often. Why do you keep buying silver? But I know why he likes silver.
Silver's behavior in this cycle reflects a market no longer controlled by paper mechanisms or temporary disruptions, but by deep structural forces that have been building for decades. Supply deficits, shrinking inventories, and a rising global awareness of currency debasement have pushed physical demand into territory rarely seen before. Each surge in price reinforces a shift in psychology, signaling that silver is no longer just an industrial metal, but a core asset for wealth protection and asymmetric upside. As accumulation accelerates, even modest pullbacks are being met by renewed buying, creating the foundation for a decisive move into higher ranges. This phase marks the early innings of a broader transition away from failing monetary structures toward tangible stores of value. Silver is stepping into that role with unprecedented strength, and the long-term trajectory suggests higher highs are still ahead. Share your thoughts on their analysis in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.